Okay, stay at home and work at home, a huge theme of 2020. Obviously. It's not going away anytime soon. At least that's what our today's Countdown closer says. He's Michael Harris, Eridan's Capital Advisors Director of Family Office, joining us now. Michael, let's just say we're having this conversation 6 months from now. Make your case for these names, and particularly which ones, because there is sort of a panoply here to choose from.
Well, I think to your point, there's no doubt that the stay-at-home trade, if you will, is going to continue to have momentum, just like we've seen some of the tech names, continue to become bid up today. But what's really interesting, I think, is that we're going to probably see a rotation from some of those tech names into some more value-oriented names in the second half of the year once we start to see the return to the new normal. Some sectors that I think are really interesting are tech and leisure. So from a leisure and travel standpoint, we're going to see all of that pent-up demand come back in the second half of the year as economic recovery starts to pan out. Another to think about is financials, right? So we've seen stock buybacks across the board. M&A activity is at record highs, and the yield curve is steepening. So many of the bank names are also going to be a good value play to pick up here over the next 6 months.
However, specifically when you talk about the names that will work from home, if you look at the Direxion work from home ETF, which was born of this pandemic, the 6-month chart just looks amazing, even as we watch the vaccinations start to make their way through the system. This is an intraday, but you can see from the 6-month chart what a nice move it's actually made. Give me a sense of the subsectors that you feel in the work from home, play at home space that might continue to do well.
Well, I think that in many cases, the train has already left the station when it comes to work from home. And that's why we're telling folks that they need to start positioning for the next cycle in the markets away from some of the growth tech names into some of the value sectors that I mentioned. Another one that I think that's really important here is infrastructure. So I think everyone feels that there will be some sort of a bipartisan deal in Washington in order to be able to build out, rebuild America, if you will. And on the back of that, we could see commercial services and subsectors like transportation benefit from that.
Michael, great to have you. As Michael was